Hi, I'm Scott from Solace Financial. Sorry I didn't do a video last month. Went on an 8-day cruise with my family. Cruising's not for me. The Reserve Bank put up interest rates on Tuesday by 0.25%, and this is what happened to the share market. The share market is really not pricing in any interest rate increases or bad news, and that's a little bit worrying for us, which is why we still have a conservative outlook on client portfolios. There's two things that I wanted to talk to you about today. The first is the banks, and the second is wine. The banks make a profit by charging more for their home loans on their interest rate than they pay to deposit holders on term deposits. And banks are notoriously pretty slow about putting up their term deposit rates when the Reserve Bank puts up their rates. This chart here shows the interest rate rises by the Reserve Banks and the term deposit rates over the last 12 months. What we can see here is that there is a little bit of a shortage of deposits for banks, so they're having to increase their term deposit rates now pretty high, and that will affect the profitability of banks in the future. The other side of it is that banks are also now putting in provisions for doubtful debts in their profit and loss statements, and this is because they expect that there to be more debts in the future that can't be repaid by borrowers. And this is just due to the increase in interest rates, but it is something that we're looking at when we're looking at shares of banks and things like that. The second thing that I wanted to talk about was wine, and more specifically treasury wines. So wines in a lot of households are a staple, like bread and milk. So companies like Coles and Woolworths are really resistant to increases in inflation because they can pass on the cost of the increase in goods, but also wine can to a certain extent as well. Back in 2021, China imposed a tariff of up to 218% on Australian wines, and we lost about $450 million worth of wine sales in Australia to the Chinese market. We've done really well over the time finding new customers in Europe and the US, and now it is looking like China is going to repeal some of these tariffs, which may mean that companies like Treasury Wines can sell more wine again to China and increase their profitability. Now, Treasury Wines as a share trades on about the same price to earnings ratio as Coles and Woolworths at about 28 and 29. And we're looking at Treasury Wines and looking at that, and they might have some really good upside potential sometime later in the year. We're not saying to go out and buy Treasury Wine shares at the moment. We still think that there is a bit of a fall in the market, but there are opportunities out there this year that we're really going to look at. That's it for this month. I'm just going to include a couple of extra photos from my cruise at the end of this video. And if you've got any questions about anything that I talked about, please don't hesitate to give me a call. Thanks very much for your time. It's recording?
Yeah. Yeah.